Hi traders, and welcome to the technical analysis market wrap on the 30th of July. So we saw some dollar weakness return to the market this week, and we've seen some big moves in the pound USD and also the euro USD. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD. Even though we've had some pretty good strength on the other US dollar based pairs, we've got a little bit of weakness coming up on the Aussie. So what it has done, look, it overshot our first target of 73.50 here. You can see that it actually pushed back all above that line now. So you see the two big rejections here, and it's been hovering around this point basically for a week now, but it's found itself in a nice little channel, and it's giving us some pretty good opportunities from a trading standpoint inside this channel. If we go to the smaller time frames, you'll see that you're able to actually get hold of a couple of the pullbacks. So you can see we've got the high, low sequences on a 1 hour chart here. You can see the pullback entries on the 20, which are great. The 4 hour, probably to a lesser extent because the channel's fairly tight. It's only basically a probably 70 pip channel. But for scalping, you can definitely get in. You can see here on the 15-minute chart, the bottom of the channel is, I'll just take it out a little bit so you can see what I'm talking about. You can see that you've got some really good moves off the channel itself, and then pulling back at the 20 moving average, and it gives you about 3 entry points. Now above the channel, it's got a fair bit of resistance here. You can see that it was resistance over here as well when it did try and push through the first time. And look, we know that this is an important level. We know that 73.50 is a fairly important level anyway, and it found support there on the way down. Even though it was coming down fairly strongly, it did find support at that level. So it's no surprise to see it basically finding resistance again here. Now it's also got the backup of the 20 moving average. So realistically, for this to get above the 72.20 and the 20 moving average, it's got a lot of work to do. And I wouldn't have thought it would be a likely trade here, but what we're looking for is the opportunities to look for a change of trend on smaller time frames off this level, and then basically trade it back down to the level that we thought it would go to anyway. Until it breaks out of this zone, there's not really anything doing from a longer standpoint. You want to be either just shorting inside the channel here, or if we get a lightning bolt change of trend to the upside, maybe we can start looking at longs then. Or of course, if it breaks down below the 73.50 and then comes back and retests it from below, then we're looking for a short down to 72. But until that happens, we just trade what we see, and what we see is a 15-minute channel. That's probably the best time frame for it because it's only a 70 or 80 pip range. Look for a change of trend. Look for the lower high, lower low sequence on the 15-minute, and the target is the 73.50. Pretty much a very clear target for it, and I think it could probably hover in there while it consolidates that around the zone. All right, we'll move over to the US dollar CAD now. This one's been in a bit of a free fall this week. You can see that the dollar strength has certainly had an impact on this one. This level was always going to be a tough level anyway. Like, we knew that the that 126 sort of 20 area was going to be a very strong roll reversal zone, and it proved to be that. Once it broke through, it came back and retested it. It tested 200 4 times basically this week, and sold off every time. And now its last line of defense is really the 50 moving average. You can see there. I wouldn't want it to be coming all the way back down to that one sort of 23.20 area, because that's just too deep a pullback, and then it's probably a little bit of trouble really. So what we want to see is a hold off on the 50 moving average here. If we get that, that's a fairly reasonable sign that it might reverse and actually push back up into the 126.20. I think it could find itself in this zone for a while now. I don't know if it's going to be going any higher anytime soon, unless we get a big change in dynamics. So probably trade the percentages here and look for the longs to the 126.20 off the 50 zone. In order for that to happen, of course, we're going to need a change of trend on smaller time frames. It certainly doesn't look like doing that at the moment on the 1 hour in particular. But what you want to be seeing is the best way to do this is to actually draw your horizontal where you think the support should be, which is this level here. And it's not just the 50 moving average, of course. It is a support zone that was playing out right through this area here as well, and it was resistance there. So it's a roll reversal zone anyway. But then we go down to a 1 hour and you zoom it in, and you can see where our target is. It doesn't absolutely have to get to that level. Now, if this does turn around and start printing higher highs and higher lows on the 1 hour and breaks above the 20 moving average, then that's probably enough of a sign to say, well, it got fairly close, and this is the area that it's going for again, the 126. You can see there's a lot of room there. So even though it doesn't look like it's the chart's fairly consolidated, there is a fair bit of room there to actually get to a decent profit. You've got a 126.20, and it's currently at 124.50. So you got the best part of 100, probably 120 of quality pips that you can get, but it's worth waiting for the change of trend, because if it doesn't do that, and there's no momentum in your favor, and that's not good trading. So either wait for it to touch a 124.20 area and look for the change of trend then, or if we get a change of trend before then, start to look for the up movement on that one. Failing that, if it breaks the 20 moving average, I wouldn't be shorting it as soon as it breaks it. I'd be waiting for a pullback test of that level from below, of course. So you wait for it to break down, then come back up, test that level from below, and then look for the shorting opportunities down to the 123.20. Not the preferred trade, but if that's what it does, that's what we'll do. All right, we'll move over to the US dollar yen now. This one's at the last line of defense as well, really. We can see here I've identified what could be potentially an inverse head and shoulders, but that's quickly starting to disappear, especially if we get any lower on the shoulder here. So that's the neckline that we'd be talking about. That's the shoulder, that's the head. This is the other shoulder. We wouldn't want it to be getting any lower than this, otherwise it's not really the head and shoulders anymore, an inverse head and shoulders. This is the last line of defense for it, that sort of 109, sort of 30 area, that red line there. We wouldn't want it to be getting past there. If it gets past there, then we're going to be looking for shorts down to the 108.50 again. So realistically, if it bounces from here, we're looking for long opportunities up to around that 110.50 area. Look for any changes of trend on the smaller time frames. That'll get you in, no problem there. But of course, if it does break through this zone and closes the daily lower than that 109.30 area, then this is going to be in a little bit of trouble, and it would be looking for shorts down to the 108.50. So either way, I'm not overly fussed either way on this one, actually. I think both of them are quality trades if you get the daily close above each level, and there's enough room to move on both sides to actually get a decent profit out of it if you wait for that daily change of trend. So just wait for the break of the candle and let price action dictate what we want to see here. Okay, we'll go over to the dollar index. This has been the star of the show for the week, really. Absolute weakness for the whole week. You can see that even this attempted move up here was being completely broken down by the sellers. They've pushed it all the way down below the 20 moving average again, and it's come down to the last line of defense as well. So it's on the 50 moving average, similar to what the CAD was. You can see here, this is a very strong role reversal zone for it. If the 109 and the 91.80, sorry, doesn't hold, this is probably in a little bit of trouble. You could definitely see it getting back into the 90s again. So last line of defense for the dollar index. If it doesn't hold up at this level here, we'll be looking for short moves down to probably in the first instance, probably the 91.20 area, but then into the 90s. So yeah, it's looking very, very weak at the moment. But of course, that could turn, its fortunes could change very, very quickly, especially when it's at a very strong support zone. It's got the 50 moving average and it's at a roll reversal zone. So look for a change of trend, and it needs to be a solid change of trend. I wouldn't even be taking a 1 hour on this one because, of course, this is a daily, and the daily has been so weak that it's going to take a significant time frame to actually change this trend. So you want to be going down to a 4 hour time frame. You know, the support line is there. Look for a change of trend here. Look for a series of higher highs and higher lows. And if it does that, we can start approaching some of these resistance levels again. Say the 92.70 is probably the first logical target, and that's what you'd be going for. So there's plenty of room for it to move. But it does have to actually change the momentum. We've got to break this momentum cycle down that's pushing. And if we do that, we'll be aiming for that 92.80 level and 92.70 just through here, this level through here. You can see where the resistance is. Failing that, of course, if it breaks through the support and the daily closes, I would still be waiting for a pullback. I don't think it's going to completely capitulate that far. It's very rare that it does that. So what we would be waiting for, similar to what happened here, you can see it came down, broke through that support line, then came back up and tested it on this candle here. That's exactly what we'll be waiting for. We want to see a break of that line, a retest from below, and then we start to look for the shorts. And then the quality shorts will come when the 20 moving averages catches up. All right, the EURUSD, we'll go to have a quick look at this one. You can see that this is obviously the opposite of the dollar index, so we won't spend a lot of time on this. You can see that the strength is there. It was pinning that when you can see all of the rejection candles here, a lot of doji candles and a lot of long wick candles are telling us that the price is definitely at an indecision zone here. Didn't quite reach the support that probably would have pulled it up anyway, but it's certainly turned around its fortunes. But for me, it's still got a little bit of work to do. Knowing that the dollar index is at a reversal zone, this has got a little bit of work. It hasn't really done a series of higher highs and higher lows on the daily yet. We can see that it's only gone up solidly without a pullback. So I would be trading this one for a little bit of caution. Now, if it does come back and test the 20 moving average here, so it takes out the 20 moving average and finds support there, and then goes up and breaks this high, then you've got the lightning bolt, and it's looking really good. But of course, at that point, the dollar index is sailing down to 90, so you're going to get that effect anyway, which is good. And this is the preferred trade, of course. So What we want to wait for here is a pullback down to the 20 moving average and a daily break above the 118.80 area. That gives us the lightning bolt effect that we want. We've got a daily confirmed change of trend. Then we can look at it to go long for a little bit, with a little bit more confidence, really. And what we're aiming for is the 120, of course. So the 120 is the first level that we'll be looking for on this one. That's definitely the first point of call. So good one to keep an eye on, but not quite there yet. Okay, you got to wait for this one to actually set up properly. And then if it gets there, that'll be great. The short opportunities will be, of course, if it makes a new low. But it's got a little bit of work to do there. I think you'll be waiting quite a while. So not the preferred trade on the short at the moment. And it has to really break down and close a daily below this. But even if it does that, support is not far away. So the short's not the quality, but the long one, if it does pull back to the 20 moving average, is the trade for the EURUSD. All right, we'll move over to the pound USD now. The pound USD has been the star of the show, really, in terms of the majors, because this has really blasted through, and you can see a big separation. Different to the euro, you can actually see that these have got big long-range candles that have pushed up a very strong level of support. So that was a role reversal zone. It was very strong resistance through here, very strong support there, and it's proven to really bounce through it here. You can see we had a big engulfing candle, even though it did print a daily close below that support level. What was important about this close, and this is what you really need to be mindful of, you've got to watch that price action, because even though it did break that support zone, you can see that the long wick, I'll pop the highlighter on it here, you can see that when it did break through, even though it looked like it was going to be a big long bearish candle, the buyers actually picked up a lot of momentum inside that daily candle and actually pushed it up more than half of its body. So half of this candle's length and range was actually a wick. So that was a big reversal just in that day. So that doesn't give me the confidence that it's actually going to be, a significant break. Even though it did break a significant zone, it didn't break it well. And that's really, really important to factor in when you are looking at a break of a zone. And then, of course, the very next candle was a complete engulfing of the body. So this body's completely engulfed this body, which totally takes away any attempt to try and reverse it at that level from below. So I know earlier I said if it tests the level from below, you can look for shorts. This gave you no opportunity. You can see that the body is completely engulfed the previous one and closed above the support level, most importantly. And once it did that, off it went, and there was no stopping it. So very good trade, and I know a lot of people picked this up, which is awesome, because you can see the signs were there that it was going to reverse off this support zone, and it did the job for us. And quite often the pound is very good for that. Once it does move, it moves very, very quickly. So good trading here. It is at very, very strong resistance now, though. You can see that the resistance on the, I have to go to a daily. You can see right through here that the horizontal line, if you match it up, is going to meet a lot of resistance that we had earlier in the year. You can see here through March and through April. So we probably expect the same resistance is going to hold up here. It's not to say it's not going to stop it, but it's probably going to pull it up for a little bit. Okay, so it's probably going to reverse around this level here. Maybe wait for a pullback down on the 20 moving average. That'd be fine. Then start looking for long opportunities again. It's got a heap of MACD momentum in its favor. Signal lines out of the MACD. It's about to cross a zero. So it's certainly got plenty of power, but it is going to find a little bit of resistance around this point here. So look for a bit of a pullback to the 20 and then a break of this resistance zone. But just be mindful that if you are trading it long, make sure you've got enough room from where you are trading it to this resistance zone. It will probably eventually break, but you don't want to be the first one testing it. So just be a bit careful there. All right, the last one we'll have a look at is gold today. So gold has been really, really good again. It's been playing the game inside that channel. It hit our target as of last night. It went to the 1830 level. It only just touched it, but it did get there, which is good. So the good thing about gold is it's being pretty predictable at the moment. So, you can set a level for it. We had two targets for it. It was either going to go to the 1830, which it did, or it was going to go to the 1765 from this zone here. You can see that the consolidation was happening, and it only had two logical places to go. The good thing about gold is, though, that once it does get through those zones, it does move. So even though it might sound logical, it's either going to go one way or the other, what is important is it does it fairly quickly, and that allows you to actually trade it. So the 1830 was hit, so that's pretty good. It's got trouble in front of it now. It's got to break this zone and break it clearly before we actually look for the next level, which is around, if you want to go for the shorter target, it's 1850. And if you want to go for a longer term target, that'll be the 1900 on gold. So that's that high up around here. But what you want to see before you do that is a clear close on the 1830 or higher. So a daily close must close above this level here before you take it any longer. If you're not already in it, of course, that is. And if you are in it, you've probably taken some profit anyway. So that's what you're looking for there. Shorting opportunities, again, it's got to close below the 1794, and then you'd be looking for the 1765. But the preferred trade here is a close above the 1830 on a daily chart, and then you can look for a short scalp to the 1850 and the longer term trade up to the 1900. So thanks for joining us today. We've seen some really good opportunities to trade inside some ranges. I think we've still got that for today's trading and maybe early into next week. I'm not so sure we're going to break into big trading out of these trading ranges. So we should see some scalping opportunities early next week again. Once these key zones are broken, then I think we'll be able to start trading our way into the longer term trends again. So hopefully you've had some good pickups and have a great weekend. I look forward to seeing you next week.